The world stopped. Not gradually, not with warning. It was as if someone pulled the plug on civilization. Streets fell silent. Airports became graveyards of steel. City lights flickered out one by one until the planet looked asleep. Television screamed the same words in every language. State of emergency, record infections, global shutdown. Fear moved faster than the virus. People locked their doors, clutched their phones, and waited for instructions. Stock markets bled billions in minutes. Families stared at screens refreshing numbers that only went one way, down. And somewhere in the middle of that silence, a few people were calm. While the rest of the world counted losses, they were counting opportunities. Not because they were heartless, but because they understood the one rule that never changes. Every collapse hides a transfer. Wealth doesn't vanish. It moves from emotional hands to prepared ones. I'm Alex, a former financial advisor. For years, I helped people across Europe allocate more than 10 million euros. Then I built my own six-figure public portfolio yielding over 20% annually in just 3 years. I don't do one-on-one consulting anymore. I teach what the system never will, how to stay calm when the world loses its mind. And today, I'm giving you something most investors never get: a blueprint. A crisis action plan for the next time everything stops. Because make no mistake, it will stop again. The headlines will scream again, but this time you'll have a map. By the end of this video, you'll know exactly how panic is manufactured, how money flows through it, and how to turn the next global meltdown into your best entry point. Crashes don't destroy wealth, they transfer it from emotional hands to strategic ones, from the crowd to the prepared. So if you're tired of being the one watching panic on TV while others quietly buy your fear, keep watching. Because this video won't be pretty. It won't be motivational fluff. It will be facts, data, history, and a plan. A clear playbook on how to turn your global chaos into opportunity. But before we build our plan, we need to understand how the game was really played, because only when you see who profited from panic, you'll know how the system actually works. So who actually won during the pandemic? Because someone had to. Money never disappears, it just moves. The first winners were governments. Overnight, they gained powers they'd never even dreamed of. Imagine this: one signature and the entire economy shuts down. They could literally tell you, you can't leave your home, you can't open your business, you can't see your family, and everything we used to call freedom suddenly became a permission. And the scariest part, most people applauded. Fear made obedience feel like safety. The second winners, big tech. How many hours did you spend staring at screens during lockdowns? Twice as much? 3 times? Zoom replaced the office. Netflix replaced the cinema. Amazon replaced your local store. Facebook and YouTube replaced your social life. Their servers nearly melted under the load, and their profits hit record highs. Every extra hour you spent on scrolling was another dollar in their pockets. And third, big pharma. Vaccines became the new gold rush. Contracts weren't counted in millions, they were counted in billions. Every new wave meant another booster, another order, another payday. Pfizer, Moderna, BioNTech, they turned panic into the most profitable product of the decade. Fourth, the media. If you want ratings, you need fear. If there's no fear, nobody clicks refresh, and the pandemic was their Super Bowl. Every headline was a cliffhanger. Every day, a new record of doom. Fear sells. Always has, always will. And finally, the smart investors. The ones who didn't stare at headlines, but stared at charts instead. When everyone else was panicking, they were buying. When others dumped stocks in terror, they quietly collected assets at 50 to 70% discounts. And today, those same people sit on portfolios that multiply. Everyone else bought toilet paper. They bought equity. So let me say it bluntly. Panic is a product. It's created, packaged, and sold to you. For television, panic means ratings. For politicians, panic means compliance. For pharma, panic means revenue. For tech, panic means screen time and data. For you, panic means sleepless nights, lost money, and worse decisions. So the real question is, next time, do you want to be the customer of fear or the seller? And make no mistake, fear doesn't just appear out of nowhere. It's engineered, it's optimized and maintained, because panic only pays when someone controls the narrative. And to control it, you need to control information. That's exactly what happened during COVID. It wasn't enough for people to be scared. They also had to be silenced. Alternative opinions had to vanish, because doubt kills panic faster than any cure. If people are allowed to debate, fear loses oxygen. So what do? You shut down the debate. Mark Zuckerberg himself admitted publicly that the White House repeatedly pressured Meta to censor COVID-related posts, even satire. Yes, memes. They were flagged and deleted because someone might misunderstand them. Meta official oversight board later wrote, during the COVID-19 public health emergency, Meta removed posts with claims that could contribute to imminent physical harm. Sounds noble, right? But in practice, it means this. If someone wrote about side effects, delete. If a doctor questioned lockdown damage, delete. If you shared a personal story, delete. Now fast forward. FBI Director Christopher Wray said in 2023, the FBI has for quite some time now assessed that the origins of the pandemic are most likely a potential lab incident in Wuhan. Let that sink in. Even the FBI now says it was most likely a lab leak. Yet, for 2 years, anyone who said the same thing was branded a conspiracy theorist. Why? Because early on, the information flow was sterilized. It was a simple chain reaction. Politicians pressured platforms. Platforms feared regulation, algorithm adjusted, and your feed turned into a single uniform narrative. Every post came with the same blue banner. Learn more about COVID-19 at WHO. Looked harmless, but it was a filter marking that was official truth. Everything else disappeared. Doctors who questioned the narrative, silenced. A physician said, we are creating more harm than good, banned. Another proposed alternative treatments, deleted. Not because they were proven wrong, but because they disrupted the sales pitch of fear. And that's where the biggest lesson for investor hides. When information is censored, markets misprice reality. Fear becomes artificially amplified. And when fear is overblown, prices drop below logic. That's when you buy. And censorship equals synthetic fear. Synthetic fear equals discounts on assets. Let me give you a real example from my own portfolio. In March 2020, cruise lines were declared dead. Analysts screamed, nobody will ever step on a ship again. Headlines, travel is over, global tourism is bankrupt. Royal Caribbean stock crashed from over $130 to barely $30. Everyone said buying was a suicide. I bought, because logic still works when emotion doesn't. Did I really believe humans would stop traveling forever? Of course not. Fast forward, tourism came back. Ships filled again. Today, Royal Caribbean trades around $316 a share. That's over 10x from the bottom. And here's the irony. The more information they censored, the bigger the opportunity got. When fear becomes policy, value gets buried. And that's where psycho investors hunt. Next time you hear every media outlet repeating the same story word for word, stop and think. Is it truth or just a product being sold at a scale? Because when everyone agrees, something being hidden, and that something is usually profit. So let's talk about one of the biggest unanswered questions in modern history. Where did COVID actually start? From day one, we were told a single neat story. A virus jumped from a bat to a human in a wet market. Random accident, nature's mistake, case closed. But then another scenario started. Whispering in the background, a lab. Maybe not a sci-fi weapon, not an intentional act, but an accident from the Wuhan Institute of Virology, a facility that had been experimenting with coronaviruses for years. Here's what makes it interesting. The lab sits just a few miles from the market blamed for the outbreak. It was publicly documented to be hanging gain-of-function research on bad viruses. And some of those projects were partly funded by US grants through the EcoHealth Alliance. Does that prove a leak? Nope. But does it raise questions? any rational investor, scientist, or policymaker should ask? Absolutely. Yet the moment anyone asked, they were erased. For nearly 2 years, mentioning the lab leak hypothesis could cost you a platform. You'd be labeled as anti-science, anti-conspiracy theorist, a danger to public health. Then 2021 came. Even US intelligence agencies admitted they couldn't agree on the origin. Some said zoonotic, others said lab leak with low confidence. Translation: we don't know. And by 2023, FBI Director Christopher Wray finally said it out loud. The FBI has for quite some time now assessed that the origins of the pandemic are most likely a potential lab leak incident in Wuhan. Most likely, the two words that flip the entire narrative. So why silence the debate? Because panic requires clarity. If people start questioning the source, they start questioning everything that follows. The restrictions, the mandates, the spending, the trillion-dollar bailouts. It's easier to keep the world frightened of nature than suspicious of policy. Bad soup is chaos without a culprit. A lab leak is accountability, and accountability ruins the business model of fear. When the origin stays bloodied, panic lasts longer. When panic lasts longer, markets stay volatile. Volatility creates swings, and swings create opportunity. Look back at 2020-2021. We saw the fastest market crash in history, down 35% in a single month, followed by one of the fastest recoveries ever recorded. That wasn't random, that was confusion trading. Information gaps amplify emotion. Emotions move prices. If you understood that dynamic, you didn't need a PhD in virology. You needed discipline. Because markets aren't driven by viruses, they are driven by human behavior under uncertainty. Picture this. There's a fire in your neighborhood. Half people scream arson, the others say freak lightning. While they argue, everyone's too scared to buy property nearby. Prices drop. You, the calm one, walk in, buy the house for half price, and wait. A year later, the panic fades, the neighborhood rebuilds, and your assets doubles. That's exactly what happened with markets during the pandemic. While the world argued about masks and mandates, psycho investors quietly loaded positions in beaten down sectors, travel, energy, consumer discretionary, and doubled, tripled, even 10x'd when normality returned. That's not luck. That's pattern recognition, because every global crisis follows the same script. First, shock, headlines explode, liquidity vanishes. Second, control, governments step in with rules and monetary printing. Third, narrative enforcement, dissent is labeled danger. Fourth, capital rotation, wealth shifts from retail panic to institutional patience. And fifth, recovery, the system resets. Stronger for the few, weaker for the many. Understanding that cycle is your edge. Now, let's examine the fastest corporate miracle in modern science, the vaccine. Historically, major vaccines take a decade or more. Polio, 47 years. Ebola, 43 years. Measles, 9 years. Flu, 12 years. COVID, under 12 months from first case to first shot. The official story: technology advanced, mRNA innovation, global cooperation. Partially true. But what really made it possible was money. Governments funneled billions into the race. No expense spared, no regulatory decay tolerated. Fast track became the norm. Pharma executives weren't betting their own capital, they were betting yours. Taxpayer funds guaranteed the outcome. If the product failed, the loss was public. If it worked, the profits were private. And it worked spectacularly. For that, Pfizer booked roughly $36 billion from its COVID vaccine in 2021 alone. Moderna pulled $18 billion, BioNTech $22 billion. Their market cap exploded 8-fold, 12-fold, 20-fold in months. Investors who caught that early, they saw gains most people never experience in a lifetime. But here's the catch. The same speed that creates euphoria also builds bubbles. Once fear fades, demand collapses and valuations deflate. Moderna today trades at a fraction of its peak, minus 93%. That's the cycle again. Panic inflates, calm deflates. It's no different than any speculative money in history. Tulips, dot-coms, and so on. Except this time, the fuel wasn't greed, it was fear. Think about it like this. Imagine a city suddenly convinced the sun causes blindness. madness. Politicians declare no one leaves home without special glasses. Every new anchor repeats it. People panic, buy eyewear, the stock of the leading sunglasses company 10x's. You're seeing the hysteria, buy in early, ride the wave, sell before rationality returns. That's how money is made from mass emotion. Now swap sunlight for virus and sunglasses for vaccines. Same psychological mechanics, different scale. The winners weren't just corporations, they were those who understood the flow. Where was money printing going? Who was receiving the subsidies, the stimulus, the contracts? In 2020, it was tech and pharma. In 2022-23, it was energy and defense. Next time, it'll be something else. But the pattern remains. Governments create the flood, and the prepared ride the current. Let's talk numbers. From 2020 to 2022, global governments injected roughly 20 trillions into the system. That liquidity had to land somewhere. First, it inflated stocks, then real estate, then crypto. Retail investors thought they were geniuses. Institutions knew it was temporary. When the Fed finally raised rates, the air came out, exactly as planned. And while the average person blamed inflation, the real cause was wealth transfer. Stimulus checks distracted the masses with $1,200. Meanwhile, asset holders gained 12 trillion. The media called it support. In reality, it was redistribution upward. That's the part nobody explains on CNBC. When a government prints money, it's not creating wealth, it's moving it. From savers to borrowers, from fixed income workers to leveraged investors, from you to them. And you either learn to surf that wave or drown in it. Let's zoom back to fear. Because fear wasn't just the message, it was the monetization engine. Every click, every refresh, every argument online equals data. Every extra minute on Netflix, subscription revenue. Every online purchase from boredom, Amazon profit. Every vaccine dose, government payment. Every stimulus headline, market speculation. The pandemic didn't break the system, it revealed it. We live in an economy where emotion is the most valuable commodity. And as an investors, that's exactly where our leverage lies. When others treat fear as danger, psycho investors treat it as data. If you can measure it, you can monetize it. That's why I watch the VIX, Volatility Index. When it spikes above 40, panic is near its peak. Historically, those moments haven't been best entries in decades. March 2020, VIX equaled 82. Result: one of the best buying windows of the century. Those who pulled the trigger then are now sitting on generational returns. So next time fear headlines dominate, don't refresh your newsfeed. Refresh your portfolio watch list. Because remember, fear makes people sell stories and buy safety. But safety rarely builds wealth. Calculated aggression does. Okay, let's stop looking backward and start building forward. Because history isn't useful unless you can weaponize it. We know that panic is a product. We know fear creates discounts. We know governments print, markets swing, narratives blind, and a handful of people quietly make a fortune. The question is simple: how do you become one of them next time? This is where most people freeze. They think opportunity only appeals when things are calm. They wait for certainty, for confirmation, for someone else to tell them it's safe again. By the time they act, the window's gone, the sale's over, and the professionals are already counting their returns. Here's the uncomfortable truth: by the time it feels safe to buy, it's already expensive. That's why every crisis needs a playbook written before it happens. The first rule of this playbook: you can't trade fear if you are trapped in it. Emotion is contagious, so your primary weapon is a brokerage account. You need a process so clear, so mechanical that when the world burns, you execute without hesitation. For me, it starts with something stupidly simple: access. You can't buy when the market melts down if you don't even have a brokerage account. During the March 2020 crash, I watched people try to sign up for platforms as indices fell 10% a day. Verification delays, document uploads, chaos. They missed the bottom not because they lacked knowledge, but because they lacked infrastructure. So rule number one: be armed before the war starts. Open your account, fund it, connect it to your bank, and that's it. You don't need to trade daily, you just need to be ready. Liquidity without readiness is useless. Second, know your fear threshold. I track the VIX like a sniper scopes wind speed. When that index climbs above 40, the entire world is screaming. And when everyone screams, I start buying. Not recklessly, not all at once, systematically. It sounds psychological, right? But while everyone is panicking, that's exactly why it works. Panic is temporary, value is permanent. In March 2020, the VIX was 82. Quality companies were trading like penny stocks. Microsoft, Apple, even ETFs tracking the S&P 500 were 30 to 35% off. If you waited for the news to tell you it was safe, you missed roughly 100% upside in less than a year. That's why I don't care what causes the fear. Virus, war, default, whatever. Fear is fungible. The pattern is always the same. The third rule, follow the money, not the media. Every crisis comes with government cash injections. The headlines will scream about suffering, but the real question is, who's getting funded? In 2020, the winners were tech and pharma. In 2022, energy and defense. In 2025, maybe it will be infrastructure or rare metals. When trillions are printed, those trillions don't vanish into air. They land in specific sectors. Find those sectors, and you'll find the next way. Money printing is the ultimate insider signal, and it's visible to everyone who knows where to look. Fourth, limit your noise intake. Mainstream news is not built to inform you, it's built to alarm you. It's designed to keep your cortisol high and your IQ low. Turn off the daily doom scroll. Instead, build your own information diet. Credible data, verified charts, independent analysis. During crises, I consume less media, not more. Because clarity doesn't come from volume, it comes from filtering. You can't hear your instincts if you're drowning in static. Fifth, pre-build your watch list and price zones. When panic hits, your brain won't have the bandwidth to research. You'll freeze, scroll, doubt, hesitate. That's why your homework is done in peacetime. I maintain a short list of companies and ETFs I want to own long-term with exact drawdown levels when I'm comfortable buying. For example, if an index ETF like SPY or QQQ falls into my target zone, I scale in. I decide the parameters while I'm calm so I can act where I'm not. That's not trading, that's discipline and automation. Sixth, protect liquidity but don't worship it. Holding cash feels safe, but inflation is the silent tax on fear. I always keep about 10 to 20% of my portfolio liquid, enough to deploy aggressively when panic spikes. The rest stays invested because time in the market beats timing. And if you sit on 100% cash waiting for the apocalypse, you are not cautious, you're paralyzed. If you invest every penny with no buffer, you're reckless. The balance is what separates professional from gamblers. Let me illustrate with something I can call the fear ladder. Level 1, the crowd. Reacts emotionally, sells everything, hoards cash. Level 2, amateur contrarian. Buys too early, runs out of cash before the bottom. And level 3, the psycho one. Builds positions as fear peaks, scales in through volatility and rides the recovery. The difference between level 2 and level 3 isn't intelligence, it's structure. The psycho investor has a plan for every layer of panic. When VIX hits 30, test buy. When hits 40, increase exposure. VIX 50, deploy reserves. By the time VIX falls back under 25, you're already sitting on unrealized gains while everyone else wonders what happened. And here's something no textbook will tell you. Fear rarely ends in a straight line. Markets bottom before headlines do. By the time the news finally admits the worst is over, the best prices are gone. That's why conviction must come from data, not dopamine. Your charts are your oxygen when everyone else suffocates. 7. Internalize risk management as survival, not theory. Position sizing is everything. Even the best thesis can implode if you overexpose. Never bet so much that a 30% drawdown destroys your ability to think. Risk small enough to stay rational. I've seen brilliant analysts wiped out by ego, not errors. They were right, but too early, too big, too leveraged. Being right means nothing if you can't stay solvent long enough to prove it. And finally, document everything. During chaos, memory lies. Write your plan, your rules, your triggers. When fear surges, you'll want to rewrite them, so don't. Trust the version of yourself that wrote them while calm, because that's the real competition, not against other investors, but against your own emotion. Every crisis tests your ability to stay human in an inhuman environment. Remember March 2020 again. Most people watched the world freeze. They believed it was different this time. But look at every chart since. The recovery wasn't just fast, it was violent. That's the reward for those who stayed in the game. So when the next shock hits, and it will, I want you to remember this moment. When headlines scream, markets in free fall, you smile. When people panic sell their index funds, you scale in. When politicians promise to protect the economy, you trace where the printed money is going. You stop consuming fear and you start pricing it, because panic will come again. It always does. But next time, you'll have the playbook, not just theory, but muscle memory. Professionals have pre-written reactions. Amateurs have feelings. That's why we build systems. So when the next once-in-a-lifetime crisis hits, and it will, you already know exactly what to do. Your portfolio becomes an algorithm of discipline. Your mind becomes the firewall against hysteria. And your life stops being reactive and starts being strategic. Let me end this with one last picture. Imagine a chessboard. Most people see the pieces. Psycho investors see the pattern. Every panic, every rally, every policy announcement, it's all the same game played with new headlines. The board never changes. Only the players who understand cycles stay on it long enough to win. So next time fear floods your screen, I want you to pause, smile, and remember this conversation. Because you already know what it means. Fear is the signal. Volatility is the invitation. Preparation is the edge. That's how you turn chaos into capital. That's how you stop being prey and start becoming the hunter. That's how you go from spectator to psychoanalyst. And if you felt that switch inside you, if this video made you see the game differently, then do the smart thing. Hit subscribe right now. Turn on the bell so you don't miss the next breakdown. Because this channel isn't about hype. It's about mastery. And the next time the world panics, I want you ready to act, not react. So join the tribe, subscribe to Psycho Investor, because the next storm is already forming. And when it hits, we'll be the ones smiling through the chaos.